But we continue our interactions with the management. So the next company on our radar is IGI. Now, GIA India has been redefining the diamond grading norms by dropping the traditional 4Cs system. This is the latest news in the diamond world in the last week, 10 days or so. That basically GIC, which is very big into diamond certification, they have decided to completely segregate the way natural diamonds are graded and the way lab-grown diamonds are graded, perhaps to drive a deeper, clear cut between the two categories of diamonds. So natural diamonds will continue to get the 4Cs, clarity, cut, color, etc. But for lab-grown, according to GIA, it will be a very simple certification of whether it's premium or whether it's standard. And if it's a very low-quality lab-grown diamond, that they won't certify it at all. I mean, there'll be no term given to it. So how does this impact, the overall market and the business for International Gemological Institute? We have Mr. Iyer, the Chief Financial Officer of IGI, joining in to weigh in on this. Mr. Iyer, great to have you on. Thanks for joining in. So this is what we really want to understand at the heart of it all. Just start by telling us how much of your revenue, and club the stones as well as jewelry, how much of your revenue is right now coming from lab-grown and how much is coming from natural? Because the bulk of it, I think if I club both the categories, and I think 60, if not higher, % of your revenue is coming from the lab-grown side. But you tell us the latest numbers.
Yeah, hi, good morning, everybody, and thanks for having me on the call. It's a pleasure to be on this call, as always. And yeah, from basis what we discussed post my Q1 results discussion, I think the business has continued on the steady path. There's nothing that has significantly changed over the last 2 months. Having said that, yeah, around 55 to 60% is our revenue mix as far as lab-grown segment goes. So that is the size of the business that we have from the lab-grown segment.
Ishwar, the thing is that with GIA, which is a very big certification, body, and it's more about the messaging that's going out in the market. And do you see any impact of this whatsoever? That till now the comfort was lab grown, also has the 4Cs. It's a diamond made in the lab. But now there's a very clear effort to drive a very clear distinction and segregation. Will that not put some pressure perhaps on demand, on the pricing of the certification? What happens to your business?
See, I think this is what we discussed over the last 2 or 3 times that we've been on the show. I think the lab-grown segment is an emerging segment, and it's going to be a large volume play over the next 3 to 5 years because of the way it has shaped up over the last 5-6 years with its affordability factor. We are assuming that many consumers are going to come into the fray, and that's the reason why we've seen even during Q1 of this year over 20% of volume growth.
No, Ishwar, I was just coming at, yes, of course, that's the long-term story. I'm talking about the pricing of the certification. How much, say, are you making on the certification of diamonds right now, lab-grown and natural? And will the pricing of that certification change with what GIA has done?
See, we mentioned this during our last call. I think we make around $15 per report as far as lab-grown certification is concerned. But having said that, this 4Cs that we've been, is the basis on which the diamonds have been graded. It's close to a century. The 4Cs have been the standards at which any diamond gets graded. Now, having said that, there is absolutely no difference between a natural diamond and a lab-grown diamond from a physical or a chemical standpoint. And, so we in IGI believe that what is paramount importance is the way we are providing information and transparency to our consumers. From that standpoint, I think we have the scale, the expertise to provide reliable, independent grading.
So you will continue with the 4Cs, Ishwar, for lab-grown diamonds. You will continue with 4Cs.
Absolutely.
So I'm just trying to understand if I'm I'm a diamond operator or even a jewelry operator, and if I have lab-grown jewelry, will it be cheaper to get a certification from GIA versus IGI? So therefore, won't that impact business?
See, the pricing between IGI and GIA has a difference historically. I think that difference will continue to exist. But having said that, with the lab-grown coming into the fray, I think it's paramount importance that consumers get that sort of in-depth information rather than just making it extremely simplistic and generic. So from that context, IGI will continue to provide 4Cs irrespective of whether it's natural diamonds or lab-grown diamonds.
All right. Hi, Ishwar. Good morning. Good to see you. When Surbhi, I thought she was saying, if I'm going to go, I thought Surbhi is off to buy a diamond. That we'll have to see what happens on that front. But Ishwar, you told us for a certificate lab grown, I think you said around $15. If I remember correctly, a natural diamond, it's around, more than double, right? I think it's around $35. Is that correct?
That's right.
So that'll be a big margin difference as well between the two?
No, but see, as I mentioned earlier as well, I think the margin differential is also taken care by the volume throughput that happens on that. So I think what we have to see from a contextual standpoint over the next 3 to 5 years is the scale up of lab grown diamonds, both loose as well as jewelry. And as I mentioned on our call last time as well, we are also seeing a significant increase in lab grown jewelry, which could be the big player for the industry as we get along the path as lab grown settles in. So from that context, I think this is just the beginning of what we think is going to be a very, very large cycle as far as lab-grown business is concerned.
But Ishwar, I think the street's worry would be that whether that realization of roughly $15, whether there is any downside risk to that, will there be pressure on your lab-grown diamond certification realization with what GIA is now doing? Is there a risk?
See, I think IGI is the market leader as far as lab-grown diamonds is concerned here in India. And over 70-75% of the produce happens in India as far as lab-grown is concerned. So I don't see any significant pricing pressures on our business. And it's been more or less stable in the last 3-4 quarters. It's more got to do with the way the lab-grown segment itself has behaved. So we are seeing a lot of stability as far as pricing is concerned. And we must remember that while there's been a slight dip in LGD pricing, that's more at the wholesale level. At the retail level, it's been very strong. It's again completely a brand equation there, which finally determines at what price it gets sold at the retail level.
Okay, all right. Ishwar, a quick couple of questions. Do you see the need for certification going down, particularly in lab grown, because your mix, from 60% has come to around 54%? It could be because the other segments are growing faster. But this is one point that the street gets a little bit nervous about, the need for certification going down. Yes or no? You don't think there's no truth in that?
I don't think so. Okay.
All right.
This in the past as well. So I don't think there's going to be any pressure there.
Yeah, but we need to put forth some of those concerns of the street, right? I mean, I take that point. I'm looking at a note as well coming in from Investec, and they are talking about your solid ROCs of around 35%, higher margins as well. We get that point. Very quickly, before we let you go, tell us the total volume target that you have for this year, if you could help us out with that, what it means in terms of revenues as well as margins. 3 quick numbers as a revision. At the end of quarter one, we'll squeeze you a little bit more. But for the year, what are these 3 numbers that we should work with?
Yeah, I think we'll stick to the guideline that we had given last time. It's a 15-20% revenue growth is what we are looking for this year. And margins, I think, it improved by some 700 basis points in quarter one. I think the same range, which I had spoken last time, between 57 to 64. I think that is the range that we are continuing to look as we progress during the course of the year.
Okay. All right, Ishwar. Thanks very much for joining in and fielding all of those questions. Appreciate you giving us the business view today on the show.